What's up, you guys? This is Jaden Schaefer. In today's video, I'm gonna break down how I recently followed Dave Ramsey's house refinance strategy. I'm gonna share exactly how that worked out for me and hopefully give you a couple tips for when you do a refinance, how you can do it in order to get the best rate, avoid some scams.
That's a scam!
And I'm also gonna clear up a couple misconceptions and things that people might actually get wrong when it comes to refinancing. So without further ado, let's dive into the video. Before we get started on this video, I would absolutely love it if you like these kind of videos about making money online, if you could smash the like button, drop me a comment for the YouTube algorithm, and most importantly, subscribe to the channel to join the journey. So without further ado, we'll actually jump into the video now. So when it comes to finding a lender, I'm gonna break down exactly which lenders I called and the rates I got in a second. But the first thing I would say when it comes to finding a lender, you can hit up the big institutional companies like Amerisave Mortgage. But what I would actually recommend you do right off the bat, in addition to hitting up the big companies and trying to get a mortgage refinance rate, I would contact local lenders in your area. By doing this, I was actually able to find a lot cheaper of a rate than something I could find at a big national mortgage refinancing thing.
Nice.
Another thing you definitely want to look at, and this is something that Dave Ramsey recommends, ask for their APR rate. Their APR rate is the rate that you're gonna pay on your monthly mortgage. It's gonna be your monthly rate, and that's what you actually wanna get. They're gonna have these contract rates, which are pretty much their rates minus their fees, and they're gonna be a lot lower. So just to cut through all the fees and to get like the bottom line exactly what you're paying, make sure you always ask for the APR rate. A lot of people, when it comes to getting a mortgage refinance, Dave Ramsey recommends doing it if you're gonna drop more than 1% in your current mortgage rate. He recommends looking into it seriously. If it's more than 1%, or even 2%, it's definitely something you want to look at. With mortgage rates being really low compared to historical data, now is probably a good time to look at that if you haven't done this in a while. One reason why a lot of people want to get a refinance is either they have enough equity in their home to get rid of their private mortgage insurance, their PMI, or they just want to really lock in a lower rate that's going to help them out a lot. So for us with our house, we initially wanted to do both of those things. We were only actually able to immediately lock a lower rate. The PMI we weren't able to get rid of off the bat. I'll explain that a little bit in a bit, but it's something that you also want to look out for. One thing you do want to know when it comes to getting this mortgage refinance, when you contact a bunch of lenders and you get, the one that's going to give you the best rate, those people will have a bunch of their different fees that you can't pretty much change, but there are some things that you can shop around for. Those are like title fees and a couple other things. They should be able to give you a list of which ones you can't change and which ones you can shop around for. But when it comes to those ones that you can shop around for, you can actually save a few $100 right off the bat by just calling a couple different title companies to make sure that you can get the cheapest rates on those ones that you can kind of shop around for. Dave Ramsey always recommends not going for a VA loan, not going for an FHA loan, but just going for a conventional loan. This makes it a lot easier, and honestly, it's a lot cheaper for your average mortgage when you're doing this. This is kind of the route we went, and it helped us out a lot when we were looking to lock in a really good rate. The one thing that we did do different than Dave Ramsey typically recommends, he typically recommends you go for the 15-year mortgage when you're refinancing so you can pay a lot less interest with a 15-year and pay it off a lot faster. For us, however, because we plan on owning this property long-term and we're keeping it as a rental for a majority of the time, and we just got the loan less than a year ago, we just refinanced with a 30-year loan. It just made a little bit more sense for us as far as going for a rental, which is what we're doing. And so because we're just using this to rent, we need to get the most cash flow possible in order to use that income to qualify for the next one. So for our current strategy, the 30-year was what we'd go for, but Dave Ramsey typically recommends a 15-year when you're going to refinance. So a lot of people, when we were calling up to try to get these refinance rates from different mortgage companies, were telling us like, hey, this is our best rate, but if you want a better rate, you can pay down points and get a lower rate. So if you pay $2,000, we'll go from 2.75 to 2.65 or something like that. Dave Ramsey says, don't do any of this. In the long run, it's not gonna save you a lot of money. When I talked to them, it was gonna save me about $9 a month, and I'd have to pay $2,000 upfront. Dave Ramsey says you're better off just throwing that money straight into the mortgage and trying to pay it off a little bit quicker. So a lot of people, they ask like, when is the best time for me to refinance my mortgage? Dave Ramsey says if you're moving in 2 years or less, it doesn't really make any sense for you to refinance your mortgage because of the closing costs you paid. We're just gonna barely get paid off. You're gonna definitely wanna refinance if the closing costs break even essentially after a couple years. So if the amount that your interest rate drops, so you're paying that much less money, if that saved money pays the closing cost off after a couple years, then it's typically something Dave Ramsey would say, go ahead and get a refinance on. So for example, if I have $5,000 in closing costs and it's gonna save me $2,000 a year, so within 2.5 years, the closing costs will essentially be paid off. It's typically something you want to go ahead on, especially if you have 10, 15, 20 years left on your mortgage. So if you're moving within 2 years of refinancing, it doesn't really make sense to refinance. At that point, you might as well just keep paying your mortgage, sell your house, and then start with a lower rate when you get your next house. One thing Dave Ramsey always recommends doing when it comes to refinancing or taking out a mortgage to begin with is to not get a mortgage that costs more than 1/4 of your take-home pay. So that is exactly what your job is paying you right now after they've already taken out taxes and other things for, insurance or whatever you have set up with your job. So after they've taken everything out, whatever your paycheck is that hits your bank account, make sure that it is not more than 1/4 of your monthly salary. So when we were going to get our loan, we originally bought this house. We had a 4% interest rate on it, which is, still a pretty great interest rate. When we got it at the time, our lender said, oh, you're never gonna wanna refinance, this is amazing. We worked on the house for about half of a year, and then we started renting half of it on Airbnb. And at that point, I decided, we've done a ton of remodeling to the whole house. The whole thing's fixed up. We've probably done enough work on this that I can get rid of the private mortgage insurance. So we decided we wanted to go ahead and do a refinance. When we called a bunch of people up, we got a bunch of different rates. The rates were so good that it made sense for us to do a finance regardless of getting rid of or keeping the private mortgage insurance. One thing that was a little sneaky that happened was we chose a company that had the best rate for us, and we decided we were going to go ahead with them, and they end up sending an appraiser here to the house to go through the house and to look at it. So when we bought our house, we bought it for $265,000, and so then we spent about $27,000 fixing the whole house up, right? So let's just say 30 grand. And then when we had the appraiser come to the house, he looked through it. And unfortunately, I actually had like a meeting that day, so I was talking to someone else the whole time that he was here. And I just kind of waved him as he left the house. And then we got our appraisal back, a week later or so, and he reappraised our house being worth $297,000. So it's pretty close to exactly what we paid to upgrade the house. And I did all the work myself. Typically when you upgrade your house, we have new quartz countertops, new floors, new walls, new light fixtures, entirely new bathrooms, every single bedroom, every single light fixture, everything in the entire house is completely remodeled. We have 2 halves of the house. We have 2 different kitchens. Both kitchens are quartz countertops, new backsplashes, all of the cupboards, all of the appliances, like everything in the whole house is completely remodeled. New fences, new backyard, everything. So getting the appraisal back that it was only worth $30,000 more than we paid for it was kind of discouraging. We were pretty bummed about it. We questioned like, oh, did we not do a good job remodeling? Did we do something wrong? Did we spend too much? In retrospect, after talking to a bunch of people, what I found out is when you have someone coming to look at your house, a lot of people would recommend you talk to the appraiser and say, hey, look, we're doing this refinance right now. We're looking to get rid of our private mortgage insurance. This is what we paid for the house. This is kind of the, where we're going with it. Is there things you would recommend having that would be done? Like, what are your thoughts on the house? Like, talk to them and kind of work with them. Because a lot of times what happens is they'll come in, look at the house, and they might miss something. Like, I wasn't able to tell him that we just got a brand new roof redone, which was, $16,000, or that we got all the landscaping in the entire property redone, front and backyard, or just a lot of new things that we did and he wasn't aware of them, which would drastically add to the value of the property. So unfortunately, we weren't able to get rid of the PMI. I think in 6 years or 5 years or something, it will expire because we're pretty close anyways with how much equity we owned in the house. In any case, we're saving a ton of money because we went from $1,480 as our monthly mortgage payment to $1,268 as our new monthly mortgage payment. So, we're saving money every month, a pretty significant chunk just on lowering the rate. So the PMI isn't that big of a deal, but definitely something I would recommend you do in the future is talk to your appraiser, tell them what you bought the house for, what you're shooting for, and see if they'll work with you on making sure that you can get rid of that PMI insurance. Oftentimes, it's literally just making sure they know exactly what you've done when you fixed up your place. So after we did all that, we were kind of bummed because we're like, dang it, maybe our house is only really worth $297. Two other houses on the street had sold for the $320, $340 range. So we ended up actually going to Zillow Offers. Zillow Offers has a thing where they will make you an offer for your house and you sell it directly to Zillow. You don't put it on the market or anything. It's kind of a, they say it's like an easier way to sell a house. It's just mostly because they can get rid of some fees and they try to buy houses at a discount before they even hit the market that way. They don't have to bid against people. A lot of people I know right now in the crazy housing market say that they've closed on houses offering $20,000 above. So, the market's really hot right now. So anyways, we wanted to get an idea. So we submitted it to Zillow Offers and they came back to us with an offer of over $340,000. So, these people are looking for good deals. They're looking to go with no fees and still they were going to pay us $340,000. So on the market, I believe we could get $350 or $355, $360 for it. Because it does have, a mother-in-law suite, a pool, 2 halves of it, new roof, every inch of it remodeled, and the front and backyard completely redone. So, unfortunately, the appraiser said, the appraisals are coming in lower than what the market is willing to pay for houses. So definitely you want to make sure that you work with them, and we found out our house is worth a lot more than our appraisal, but unfortunately we found that out after, so we weren't able to get rid of our PMI. So that's something I'd recommend you do to avoid that problem in the future. Okay, so I am back in the studio now and I'm going to break down for you all of the interest rates and the closing fees and costs that the 4 different mortgage companies I contacted gave me. I'll tell you which one I went with and a couple unexpected surprises that you're going to want to look out for. So the first company I contacted was On Trust Funding. They sent me a flyer in the mail. They said, we guarantee we can give you a 2.5% interest rate with, blah, blah, blah. They have all your information pre-filled in and like your mortgage rate that you currently have and stuff. I think that's probably just public data. So anyways, I gave them a call and of course they couldn't get me, there's a little asterisk by the 2.5. They couldn't get me the 2.5. What they said they could do for me was a 3% interest rate where I had no closing fees. You still have to pay taxes, insurance, and interest. So that was going to be around $2,270 some. Or they said they could give me a 2.75, which is kind of the average. But they said it was going to cost over $8,000 in closing costs. And that would all just be rolled in. And the way these closing costs work, I find that there's typically $1,000 to $2,000 more in fees and other little hidden gems in there. So it probably would have been closer to $12,000 or more for that 2.75 interest rate. Since of course I wasn't gonna go for the 3% interest rate because I'm just looking for the best interest rate over a 30-year mortgage and I just got started. So the lower the interest rate, the better for me in the long run. I eliminated that and I just kept that first quote. The second company I contacted was Academy Mortgage. So this is the company that I had my original house when I bought it. Our realtor recommended it. So it was like the original lender that we used. And the rate, they gave me a bunch of quotes over the phone if we're gonna do the refinance and stuff. And the amount that they had quoted out for closing fees was about $5,100. But when I looked at the fees from when we actually closed on the first time we did the house, it was over $7,000. So there's a couple $1,000s in random little fees that they weren't quoting me over the phone, which maybe, I misinterpreted or heard something, but regardless, the actual number to close our house with them would have been about $7,000. So the second company I contacted, I decided to go with a big national one that I saw on YouTube, a bunch of people talking about, the best rates. So I contacted Amerisave, and they gave me a few different options where I would be paying down points and other things like that. But of course I don't want to pay down points. So I got rid of those options, and the base option they left me with was a 2.75% mortgage. And the closing fee for that would be about $4,948. So the last place I contacted was Olympus Home Loans. They're a local lender near me, and I figured I heard this piece of advice from someone to go with, to look at some quotes from some local lenders. I decided to do that, found them on Google, gave them a call, and they ended up charging $4,100. That's what they quoted me over the phone, with my taxes, insurance, all that kind of stuff. The total closing costs when we ended up going with them because they were the cheapest one. When we ended up closing, it ended up actually costing $5,477. So there is, a little bit of a discrepancy there. And maybe that was just, I misheard something over the phone or some fees that I wasn't expecting, whatever. The same thing happened when we closed our original one with Academy Mortgage. So, you know, there's always extra little hidden fees in these things. But they ended up being the cheapest. They were a local lender, so I highly recommend you look for local lenders, and I also recommend you expect about a $1,000 to $2,000 difference in the actual closing costs with different fees. Now the thing is, they roll all of these fees into the mortgage, so I wasn't actually paying that down. But if I look at kind of what the extra interest I'm gonna have to pay because of that, blah, 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 I break even after a few years. And so it's still something you want to look at, and you want to try to get the cheapest closing cost possible because you are still going to have to pay that off eventually. So we ended up going with Olympus Home Loans. Our mortgage went from being $250,000 to $255,000 when they rolled that in. And we were not able to get rid of our PMI insurance. Unfortunately, our private mortgage insurance will still be there for the next 4 or 5 years, but we did end up going from $1,480 a month to $1,268 a month, so we made some significant savings there. Thank you so much for watching my video today. If you're interested in these kind of videos where I talk about finances, mortgage, rentals, and different ways to make money online, I would love for you to subscribe, smash the like button for the YouTube algorithm, drop me a comment, and join me on this journey of making that online dough. And I'll see you in the next video.